You were listening to chartingwealth.com for Friday, the 24th of August, 2018. We see stocks down for the day. 20-year bonds are up and gold is down big time. Let's jump first into the S&P 500. So far, we have another green up candle for the week. We had a bit of a slowdown over the prior week, market taking a rest, but so far, unless Friday is a bad day, looks like we're going to have another up week. Derivative oscillator gaining momentum. Price percent oscillator not quite flat. And remember, my friends, all market crashes in the past have occurred in the month of October. Keep that in mind. Keep your powder dry. We, of course, want to make money when the making's good. And again, here, we're not a stock calling service. We're an education firm. We want you to practice making money. But keep in mind, market crashes occur in October. If the Mueller report comes out, if bad things happen, this market has continued to move up, up, up. At some point, things that go up have to come down. So keep your eye on the price. Keep your powder dry. Learn how to trade with us. Practice, practice, practice. Use your trade worksheet, your daily market worksheets, and your weekly market worksheet once a week. And we'll record the next one after the markets close on Friday. That's where we see things on the S&P 500 on the weekly chart. What do we see on the 2-day? Well, this latest 2-day candle, we're now into the second day of the first day of the 2-day candle. On the 23rd, it will complete itself on Friday. What do we see there? Well, we had a big green up candle for the 2-day candle ending on Wednesday, the 22nd, and of course on Thursday, a bit of a pullback. Doesn't mean things are ending. We had 3 down candles previously to the last 2 green up candles, but again, keep your eye on things. Looks like things could be getting close to crossing over, going down. Hasn't happened yet, but the price percent oscillator is heading down. Derivative oscillator still gaining just a little bit of momentum, but again, that red open box candle and that price percent oscillator heading down gives us some concern. Again, it was a down day on that 4-hour chart. We can see where things really topped out in the afternoon on Tuesday, sideways on Wednesday, down on Thursday. The 4-hour chart hasn't crossed over going yet, so keep your eye on the price. Might be happening, but again, we had things move quite nicely for us. Of course, after the pullback ended, we had that jumping in point there on Friday. Well, didn't happen Friday. We saw the crossover Friday afternoon. Jumping in point was on Monday, but things are retracing. So be very careful if you haven't already taken your virtual dollars and run. Okay, back to the weekly chart, going on to QQQ. Again, for any of you who don't quite understand all that we're doing, lots of good training at the website, plus we have our book. We worked months and months and months on it, got a lot of feedback from you guys, published it a while back. Copies are available. Look under all the links we have. You can find links to purchase the book. Shipping is prepaid, and we will get it right out to you. And God bless all of you who have supported the channel by buying the book, Charting Your Way to Wealth. So what do we see on the Qs? Well, it has not been nearly as much of the kind of up movement we saw in the S&P 500, but so far for the week, a green spinning top, having had a red spinning top over the prior week, getting close to crossing over, going down. Derivative oscillators pretty much flat. Price percent oscillator is trying to cross over, going down. What do we see on that 2-day chart? Well, it's actually heading up over the prior complete 2-day candle on the 22nd and the first day of the latest on the 23rd. Derivative oscillators losing downward momentum, but the price percent oscillators heading down. So again, we don't have a trade right now because of the flux between the divergence between the weekly chart and the 2-day chart. What do we see on that 4-hour chart? Well, losing upward momentum, price percent oscillators heading up just a little bit, but we look at the candles down in the morning and then really a red spinning top, red doji just about in the afternoon. Looks like it's trying to peak out. So we'll keep our eye on the Qs, and if anything does shape up, we'll be ready to go, but we don't have anything right now because the weekly's up and the 2 days down, but the weekly might be getting ready to go down, so we might have a weekly vertical crossover for Monday. We'll see. We will keep you posted, my friends. Okay, now, from stocks to gold, to TLT, 20-year bonds. Gold is last. What do we see going on? Well, bonds are up for the day, 0.16%. Going into the second week of up movement. Now remember, the weekly chart is in a confirmed up move. Doesn't look like much of an up move there. We'll redraw it when this candle ends. We see that the price percent oscillator heading up, derivative oscillators positive, just barely. 2-day chart, again, a beautiful 2-day chart connecting 6 candles, or 5.5 so far. Derivative oscillator heading up, price percent oscillator heading up quite nicely. And on that 4-hour chart, we've just not had a pullback for a jumping in point. That's what we're waiting on. If indeed that occurs, now you might say, well, why not just get in anywhere? Well, because we have rules, and those rules work because we have practiced those rules time and time again. You wait till your weekly and your 2-day are moving in the same direction. This is one of our methods. And you wait for a pullback, that is moving in the opposite direction on the short chart. And once it crosses back over going up in the same direction as the medium and the long term, that is the 2-day and the weekly charts, you jump in. That's what we're waiting for here. Haven't had that pullback yet. Okay, lastly, we go to gold. I tried to jump into that too quick a minute ago. Gold continuing down for the day, 0.94%. Derivative oscillators still losing a little downward momentum. Price percent oscillator heading down, red down candle now. It was green yesterday, and again, it'll flux because it's not completely drawn yet. It'll finish drawing at the end of the day on Friday. It's a 5-day candle. That's what we call a weekly candle. So derivative oscillator still negative, price percent oscillator heading down. What do we see on the first day of the latest 2-day chart? Again, really a sideways slide still in gold. Derivative oscillators gaining upward momentum. Price percent oscillator is flat. And what do we see on that 4-hour chart? Well, we see that 4-hour chart trying to head down. Now, until it crosses over going down, we can't go short on gold because that's our rules, and we stick by our rules. Why? Because they work. Can you cheat and sometimes succeed? Yes, you can. But we don't like to do that. Why? Because we've established the rules and we found out they work pretty darn good. Are they perfect? No, they're not. But they sure work most of the time. That's why we call them rules. That's where we are, folks, as we end the day. Buy our book. God bless you. All the best. If you want to write to us, let us hear from you. chartingwealth1@gmail.com. All the best from the whole team here at Charting Wealth World Headquarters.